Hi, everyone. Welcome to Grayscale's deeper dive into Aave. I'm fortunate enough to be joined today by Stani Kulichov, CEO and founder of Aave. Before we dig in, I'm going to read a few disclosures, so bear with me for a few minutes. This call is for informational purposes only and is not intended to be, nor should it be construed as investment, tax, or legal advice, an investment recommendation, or an IRA provider recommendation, or an offer to sell, or the solicitation of any offer to buy or sell any digital asset or security. Clients of Grayscale may maintain positions in the digital assets discussed. Any opinions expressed throughout this webinar are solely our own and do not necessarily express the views or opinions of Grayscale or any of its affiliates. With that, let's kick it off. Thanks for joining me, Stani. I'm going to hand it over to you with our first question. Can you give us some background on yourself and how Aave came to be created? What problem you were aiming to solve?
Yeah, first of all, thanks for having me here. And I think I started roughly 8 years ago, just researching more about blockchain technology and specifically more about Ethereum and what kind of use cases and applications you can actually build in this interesting concept of a decentralized computer. And back in those days, I was still in university, finishing of my degree, actually in law, and I used to do a lot of computer programming in my early 20s and in my teen years, and I was fascinated about financial products and fintech applications. And blockchain seemed to me kind of like an interesting way of creating more efficient and transparent financial products and specifically infrastructure. So back in 2016 and going forward 2017, we started to build what Aave is today. In 2020 January, we launched the first version of the Aave protocol, and since now we had at the current moment over 23 billion worth of net deposits. And this simply came out of the idea of how we can just build better, faster, stronger financial infrastructure.
So we were going to get into all the details, but before we get more into Aave, I want to take a big step back and just talk about DeFi. What is DeFi and what does it matter? What is decentralized finance?
Yeah, I think DeFi is maybe kind of a concept that is, it has certain types of characters that makes something DeFi, a protocol, and it's short for decentralized finance. And what it essentially means is that you have a set of smart contracts, which is a way, it's essentially a programming, let's say, applications on a blockchain. And once you create those applications, they can run forever as long as that blockchain is available, or you can change and make upgrades into those contracts. But the main component is that once you create a piece of smart contracts, that's available across the whole network as a protocol. And these protocols are also permissionless, meaning that there is no specific actual barriers to use DeFi protocols. They're permissionless, so they're accessible the same way as, for example, the email protocol today. When we send over emails, it relies on these permissionless protocols, or when we connect to the internet, we browse across the web, we're relying on HTTP, IP protocols. So those same concepts apply into smart contracts and especially what we characterize as decentralized finance. Second thing is that DeFi is built on this idea of transparency. So because we use the public blockchain, in this case, for example, Ethereum, but most of these popular blockchains are public. So it means that you can see all these transactions end to end and audit every single state of the blockchain by every block, which one block can be produced by every 6 seconds, every 1 second, depending on the blockchain, but it relies on that transparency. And then third important characteristic is the idea of resiliency. So as a protocol, you can actually have something where once you build it, it's going to be immutable and you can't make changes to that software, or you have smart contracts that can be governed by a community. And in Aave's case, you have smart contracts that can only be changed. So the code can be only changed in a formal governance process based on the token holders' decisions or delegations of those token holders to delegates. And what it means is that you can trust that, for example, tomorrow, the protocol code base and everything, how it functions, is exactly the same. And this is really important because that means that you can eliminate single point of failures and middlemen out of the equation and create a almost like a very resilient execution environment for what Aave does. And what Aave does in its model is simply there's ability for users to supply cryptographic assets into the protocol and earn yield, and then borrow against those assets stable coins, for example, to finance a goal like paying your tuition, your mortgage, or financing some other type of financial opportunity that you might have. So those two characters create what basically DeFi is, and it's typically also built on open source ideology. So in the sense that all the code that is produced, it's open source, publicly available. You can review the code base and see what's happening under the hood, and kind of removes the idea of trusting third parties or middlemen to execute transactions. So over time, DeFi provides a better transparent execution environment, and down the line also more cost-efficient execution environment, because you move from not just paper agreements, but also from database to a more resilient infrastructure.
And I think that makes a lot of sense from the kind of implementation and execution perspective. For me, philosophically, for those of us that were around in 2022, we saw centralized borrowing and lending in the space certainly had its challenges. This is a little bit of a leading question, but why does it matter? In cryptocurrency, why should borrowing and lending be decentralized? What is, what are we removing from the equation in terms of, human subjectivity? What is your take there?
So when I started building Aave with our team, we realized that we want to build something that is in the sense of a public good, something that is an infrastructure that the future of finance can actually rely upon and use as an execution environment. That's why something like DeFi is very important, where you have transparency, open source, full accountability of these transactions, and ability to build something that is resilient and permanent, or has a governance process that is very well structured, and you can't really change the rules of the game overnight in a more centralized way. So we always were building Aave from the perspective that it's a part of a broader financial infrastructure that will be available and used by every single person in the planet down the line, because it makes finance more efficient, more transparent, fair, and equal access for everyone. So when we build the infrastructure, we think of the same principles, for example, as other types of open source technology is built. For example, Linux, which is an operating system in most servers as of today, are relying on Linux. And Linux is built by not just Linux Foundation, but a bunch of contributors across the world that are contributing into the code base. So the same principles we're using building Aave. So Aave Labs is just one of these contributors that historically has been contributing into the code base, but there's other contributors and they have different types of roles, from software development, risk management, or other types of contributions. And when I started years ago, most of the lending kind of like a mechanisms or use cases were built as businesses. So you had multiple centralized businesses or exchanges were running loan books. And what I noticed over the years, the protocol model was able to actually capture a lot of the activity because you have an open system where anyone can come, create a proposal, and propose the actual DAO to change the parameters that are in the protocol, or individual developers can come and improve the code base of the existing protocol. And all that process is happening completely openly, transparently. And you have, as a user, you have a 24/7 auditability for every single block of the whole state of that protocol, meaning you can quantify the whole risk exposure. Now, if you take just Aave as a protocol, but if we look into DeFi as a overall, if every single financial infrastructure is built in the same way, we will have an end-to-end way to quantify the risk and reward across the whole financial system because of the transparency, auditability, and resiliency it provides. And that's the reason why these decentralized protocols built in a more resilient fashion has been able to capture almost all of that market share that has been previously managed by centralized businesses.
And in doing so, you're making the entire system more resilient, so to speak.
Exactly.
Okay, so let's dive into Aave. It's time for my favorite question. Can you explain Aave to me as though I were 5 years old?
Yeah, I would say Aave is a place where you put your assets, and those assets can grow if you don't know any other place to actually use those assets for. And sometimes if you don't want to sell your assets, you can put them into Aave and borrow cash against those assets if you have some sort of finance goal. So it's a way to actually preserve your capital, but also have liquidity if you need some sort of capital to finance any type of goal in your life. I hope it was simple enough.
That's very simple. Excellent. And so, we consider, from my perspective, Aave is a market leader. What do you think? How is Aave different from the other borrowing and lending applications? How does it stand out just within this broader kind of crowded field of DeFi protocols?
Yeah, I think, when we started to build Aave, there wasn't a field of decentralized finance. There were ideas around building protocols, making them resilient, making them accessible, and building these future technologies that could empower people around the world and give them better opportunities. What we noticed over time is that what we were able to build within Aave has been the cutting edge of innovation, and that innovation is compounding over time even more. So we started with first version of the Aave protocol back in 2020, and every year and a half, we had a new version of the protocol. And on every single iteration of this cumulative progress, we've always improved the capital efficiency of the protocol, improved also the risk management of the protocol as well, and added more flexibility that the Aave protocol caters into different types of use cases. So in some ways, I think the success has been relied upon the ability to cumulatively innovate across the space and also keep innovating. And I think over time, as time passes, our role kind of has become, just from Aave Labs' perspective, one of the many contributors. But across the whole Aave community, there's definitely this idea of being able to continuously innovate and build more better, safer, and more efficient protocol that can cater all kinds of use cases, especially now that real-world assets are coming on chain and onto the blockchain and becoming also more usable in DeFi. We believe protocols like Aave will be the backbone of all of these assets, where they don't need to sit in wallets of individual holders, but they can actually sit in the protocol where they can be more efficiently preserving capital, earning, and also users can borrow against them. So I think that has been really big part of it, but also we've expanded as a community into new networks. So the Aave protocol was born on Ethereum network. That's where we first started. But as Ethereum started to scale with so-called layer twos, where you have lower transaction costs and are more inclusive, Aave as a protocol has been the necessary component of every single L2. And now the protocol exists in 13 different networks. So Ethereum, Arbitrum, ZK Sync, Optimism, Coinbase's base network, and so on. And also we're working on a non-EVM implementations as well, specifically with Aptos to create a Move implementation of Aave and expanding beyond the EVM network. So as you see, it's a lot about that innovation and just bringing the best execution for the users.
And so let's talk about these users. You kind of mentioned the use cases, the users. What are the big use cases, and who are the users today? How does that user base change 3, 5, 10 years from now?
Yeah, I think early users were more of enthusiasts, DeFi enthusiasts that were actually seeing higher yield in DeFi than in traditional finance. So they found DeFi as a great opportunity to preserve capital and a hedge against inflation. Now, more recently, I would say the user base have become more mature and institutionalized. So we have more institutional crypto actually companies that are using Aave, that they can collateralize their positions and the digital assets that they're supplying and borrowing against. And as stablecoins have been growing on chain, that also has reflected the growth of Aave. So I think that's the type of user base. So I think going forward in time, we're going to see more increased maturity in the user base and more of that institutional user base, specifically as the centralized lending and borrowing has decreased over the past couple of years. That has been a big opportunity for Aave to capture that market share as a protocol.
And on this note, I think it'd be fun if you share your screen. Maybe you can show everybody how the protocol works and just give them something more tangible.
Yeah, certainly. So I guess you see my screen at the moment where we have the Aave app. So we have the markets view. As we see Aave, the version 3.
Can you make it a little big? Is it just me? Can you want to make it a little bigger?
Yeah.
Oh, that's much better. Thank you.
Perfect. As we see, Aave has multiple markets, so it depends on the actual network that Aave is deployed. So we have the main Ethereum market where we have roughly 19 billion total net deposits. We have also markets on L2s like Arbitrum, which is 1.3 billion market size at the moment. So that's the net deposits. And this is where I'm actually going to make a demonstration because on Arbitrum, the cost of supplying and borrowing is much more cheaper because it's a network that is built on top of Ethereum that it settles. So I have currently here a small amount of Ethereum. So I'm going to supply Ethereum into the Aave protocol. I'm going to confirm with my MetaMask wallet. And because it's a L2, it moves really quickly. So we have here a deposit of 0.5 ETH on Aave now, and it's earning me yield. If you wrap this ETH into other assets such as staked ETH, the earnings are actually much more higher and represent the earnings that you will get from Aave staking. But for the simplicity of the example, I'm going to just use ETH, and then I'm going to borrow USDC. And I'm going to borrow 500 USDC. I can see my health factor. and I will come to that a little bit later. I'm going to confirm my transaction, and it's done. So now I have borrowed 500 USDC. That's my interest rate I'm paying for that, and I'm seeing now currently the USDC in my wallet. And we track the user network, we track the net APYs, and we track a so-called concept of a health factor. So as long as your health factor is above 1, it means that your position is not going to be liquidated by the decentralized liquidator network. But if it goes below 1, then you're in the risk of liquidation. So that's the only thing to keep in mind when you are actually borrowing. But if you supply, for example, just stable coins and you don't have any borrowing positions, then you don't need to really think about the health factor. And usually that's the 70% of the use case, is where the users are just supplying stable coins that they have converted from normal fiat dollars to Coinbase or other paths, and then they're earning interest on, let's say, USDC. And we can actually see the historical rates, how much USDC has been earning over the past month, past maybe a period of 1 year. And when we go for a longer period, like 1 year, we can see that DeFi rates has been historically higher, even on average, compared to more traditional available rates. And this is something that drives a lot of traction into DeFi in general. But yeah, that's how simple Aave is. And there's some other components like governance. So Aave is not a business, it's a protocol. And it means that all these changes into the code base are done by formalized voting process, by using the Aave tokens, either direct voting or delegations. And this voting actually helps to maintain the protocol as a public good.
This is great. This is a great interface. It's very fast. I've used it. I really enjoyed it. And it's going to be interesting, again, if we do move into a world where rates are lower, what that opportunity is going to look like within DeFi as investors can potentially look for income.
Yep.
Okay, let's talk about the token. Where does the token fit in? How does it work? What is the supply schedule and monetary policy?
Yeah, the token is a simple governance token. So it means that effectively the token governs the actual protocol completely. And by the protocol, as I referred previously, it's the set of smart contracts that enable this type of set of activity. And governing means that you can change completely the way the code base works, which is something that's we don't, for example, do, or we haven't seen the community doing often. Small modifications or improvements happen, or big improvements actually happen on a more like a newer version basis. So there's always an existing version like V2, and then a new version of like V2 is deployed, and now we're working on the V4 version that is also like deployed separately, and capital is migrated. So existing protocol governance has small changes. And then the governance votes on risk parameters, adjusting interest rates to become more competitive, adjusting risk parameters, adding new assets. So Aave protocol is a sought after market to get actually assets registered there, because it creates a lot of utility for a lot of these assets. So it has a lot of that governance power there. And also governing that TVL, so total of value, which is something that is used in the space to measure how much of these smart contracts are actually holding capital in total. And that's currently above 13 billion worth of value just sitting on those smart contracts and earning revenue. And there's also this concept of staking into the safety module. So the active governance participants or Aave holders, they can also stake Aave into a safety module which is a backstop for covering risk of the protocol, to actually earn interest there as well. So that's a really way of actually getting additional risk, but also backstopping any risk that might be, or a short fire event that happens in the protocol, which can be like a failed liquidation, or exploit, or like a vulnerability in the code. And so far, Aave has been quite resilient from those types of back attack angles. And there's also because Aave is a decentralized system, there's also a governance proposal now within the Aave community actually to enhance these Aave-nomics, as they call Aave token economics, where Aave moves into a model where the Aave token itself isn't used as a backstop asset specifically. Instead, when you're supplying assets into the protocol, you get a representative token of your assets. We call them A tokens, and those can be staked into the safety module. And then what happens is that there's a buy model in the governance tokenomics where Aave is actually bought from the market and distributed to those stakers that are taking the additional risk to protect the protocol. So it's a really interesting model. And if anyone has more kind of like wants more information, there is a proposal out there in the governance forum to look more into the details.
And I think that's important because something we talk about a lot in terms of just success of the space and of protocols is the ability to onboard new users. And to onboard new users, you need for them to feel safe using a protocol. So I think that's really important. Let's jump around a little bit. Let's talk about, what do you think is in the future, what do you think is the use case that's going to onboard the most new people into Aave? What's the catalyst, so to speak?
Yeah, I definitely think that getting more traditional assets on chain is going to be a big catalyst, effectively because on chain just makes real world assets more efficient. There's more opportunities what you can do once you tokenize. You can use DeFi, you can use those assets as a collateral and borrow against. And Aave is in the crossfire of every RWA effectively. So it's needed for every type of financial use case. And that's why it's such an important protocol to maintain. And I think that's going to be like a very big catalyst. Also, I think growing demand for stablecoins will naturally grow also the demand for Aave. And Aave also has its own native stablecoin named Go. And Go is very interesting because Go doesn't have external liquidity providers. So all the interest that is paid for borrowing Go goes directly to the Aave DAO. So for example, at 100 million minted Go that is borrowed out is earning the same amount of interest rate into the Aave DAO as 1 billion USDC. So I do think that is really interesting, but also as stablecoins are going to grow more adoption, Aave becomes more important for that expansion.
So let's talk. I think you guys have announced some things coming up in 2025 that you've announced publicly. Talk to the group about what you see, what's going to be coming up that you're excited about.
Yeah, part of this Aave 2030 proposal that we had into the submitted to the Aave community, there's a few elements there. One big element is the Aave v4. So it's a new version of Aave that is being built, providing more capital efficiency, providing more granular risk management tools, and a lot of flexibility and efficiency, especially thinking of those real-world asset use cases. And down the line, there's other things that are really valuable for the Aave protocol. One is a cross-chain liquidity layer, so being able to move funds across different networks where there's Aave deployments more efficiently. And then there is one initiative regarding the Aave network, which is ability to create a more concentrated liquidity hub with specifics that help the Aave protocol itself. So there's a lot there to unpack, but also they're it's a really interesting highlight that there's a lot to innovate in DeFi space, and I feel like it's still kind of like the very early days. And I think it's going to take a lot of time for DeFi to get more larger mainstream adoption. But I do believe that Aave is in a good place of innovating a lot of that needed infrastructure.
Thank you. So there's a lot to look forward to. I would like to take some investor questions now, because I think we've been through all of mine. So let's take a look at some of these. Okay, so you did the demo, but how can a random person out there, how can they access Aave today? How can they interact with the protocol?
Yeah, typically how users interact, they install a wallet, and through a wallet, they basically buy crypto, and then they go to Aave. So Aave has dozens and dozens of interfaces, so it doesn't need to be directly from like one of the main interfaces. It can be just a wallet that you're using on mobile or on a desktop, buying crypto and accessing directly from there. Or just using something like a wallet like MetaMask and going to app.aave.com, and after buying crypto, you can onboard and usually in most cases even users are converting dollars into stable coins and supplying stable coins into the protocol to earn. That's as simple as it is.
So all really someone has to do is effectively create some kind of on-chain wallet, like a MetaMask wallet, and then have someone either send them tokens or go on a centralized exchange and exchange fiat for tokens. And then they can come to the website, hook their wallet up to the app, and just get started and do what you showed us.
Yeah, exactly. And some of those wallets, they have a simple buy crypto button where they can already acquire crypto from their stable coins and then use them in Aave.
Why hasn't Aave ever had a major smart contract exploit?
I think we put a lot of energy into security, and the way we built Aave is from the perspective that it's resilient infrastructure and it needs to operate at its best resiliency, security standpoint, and performance. The way we build Aave, the same way as we will be building something like avionics or space technology. So we focus a lot on security. And today, obviously, DeFi is a wide spectrum because you can just build experimentational ideas on chain, or you can build something that's going to be used by billions of users. We're basically building something that's going to be used by billions of users, and we want to ensure that what we build is resilient. And it doesn't only mean that you have to have certain amount of security audits, but it's the security culture that you build within your community and within your team to build resilient software. So there's a lot of that goes into security, and it's a commitment and culture that we have been able to establish.
Here's a similar one. What has Aave done, and what does it plan to continue to do to make their smart contracts more efficient?
Yeah, from efficiency perspective, there's different kinds of efficiency. It might be efficiency related to just transaction fees. Lowering overhead of the code base will help a lot. So on the V4 of the Aave protocol, there's a lot of reduction of overhead code base and making it more simple. And then when it comes to features, V4, for example, has this idea of liquidity premiums. So within the reason Aave is most used protocol is because it's super simple. So you don't need to go to different pools and try to select where you are supplying your funds. You can just go into one place, supply them, and everything else is handled. So keeping that one main market approach is very valuable. But on the other side, what's important is that we're able to price the risk within the pool more accurately. So V4 with liquidity premiums the Aave protocol can offer the best rates if you come with the most lean collateral and borrow the most lean asset. So let's say ETH against, or perhaps stake ETH against USDC, compared to, for example, if you come and your collateral composition is on the other side of the risk spectrum, then you pay higher risk premium, which means that all that additional interest rate goes to all those borrowers, or sorry, of suppliers of USDC, for example. And then there is additional tools of risk management, for example, where with this risk configurator, we can apply new risk conditions on a time base, meaning that after a certain point, those new risk parameters will activate, but won't be activated on older positions, which creates more granularity, meaning that there's additional risk management tools, and you don't need to break the user experience for those who already have a position that they're borrowing against, but you don't want to lower their loan-to-value ratio to cause a liquidation from that perspective. So there is a lot of interesting features there, and there's even more if you look at the V4 proposal in the governance forum. It opens up quite a lot of interesting topics there.
So you mentioned TVL. What else for investors that are trying to kind of think in terms of relative value and think about the on-chain data that they're seeing? What does that look like in terms of growth? Excuse me.
Yeah, I mean, TVL is a great indicator of how users are willing to actually store their funds in those smart contracts. But I would also look at other indicators, for example, the actual volume that is happening on the borrowing side. What are all the networks that are supported? Because that's also really important. The Aave community has taken a quite expansive approach of being just a piece of software on every single network. That is where it's feasible, possible, and derives enough revenue for the protocol to be in those networks. So that is those are the one important things. But also, obviously, the rate of innovation is, at least for me, the most important thing to track, and understanding how these DeFi communities, because there isn't usually a one team behind of a protocol. It can be there can be dozen different teams, half a dozen, or there can be even dozens and dozens of contributors across the world contributing. So understanding what's their basically rate of innovation, and what is also what is the security culture there, how they think about security, how they think about that aspect is really important.
So there's going to obviously be an election question. We just got the results of our presidential election. What does that mean for Aave or for DeFi as a whole, in your view?
Yeah, I think in overall, we've been always building a technology that is something where the finance will be existing at some point. So blockchain just makes much more transparent, better execution, more auditable financial system. So we do believe that it's a question of time when DeFi is something that is used everywhere, and it's a basis that we are using the financial infrastructure. I do think that the election results are interesting because you have a candidate in the other side of the election that is very open to blockchain and crypto, but also on the other side you had also some messaging around digital assets as well. So I think what's happening is not just goes beyond politics, where it seems that crypto in general is becoming a topic that we see that this technology is going to be the future. It's more about how to find actually the ways to implement it well, and also how to deal with different types of risks that comes with let's say crypto or DeFi. For example, DeFi doesn't have a middleman risk that, for example, the same counterparty risk that banks have, or custody risk, but then it translates into smart contract risk. And even if the overall surface decreases, it's a question of like how to handle this new world of finance. So I do think in overall we're going towards a direction where crypto, blockchain, DeFi is a technology that is something that we're going to live in the future. And it's just finding the right kind of like a dialogue and right regulation around that will make this possible and the technology survives.
I agree. I think it's sort of a historic moment that you had. It's almost an unpartisan issue that, you know, both candidates were discussing these topics and that crypto was actually on the ballot, so to speak, this year. Okay, I think we have time for one more quick question. On the topic of governance, who gets to participate? Is it just concentrated in the hands of a few large holders, or can smaller holders participate too?
Yeah, even people who don't have any Aave tokens, they can go into the forum and make noise of proposals they like and don't like, and that's going to have an effect. So you don't necessarily need to be an Aave holder. It is a decentralized technology. It's something that everyone should contribute because the idea of it is to make it better and something that everyone can enjoy in the future. And obviously, if you're a more passive user, you can delegate to any of these delegate platforms that actually exist in the ecosystem. So there's different ways to go about it, but the best place to start is going to the governance forum.
That's great. So I think we're at time. Stani, thank you so much for joining me this morning, and thank you everybody for tuning in. I hope everyone has a great rest of their week and a great weekend.
Thank you so much.